Okay, so here's the beginning of the information about business structures. We're going to identify different business structures that you need to choose in order to register your business properly. So here are the different kinds of business structures that you can choose from. And then we will go through each one by one. And let's have Rahel, can you read this slide?
Yes. The government will want to know this is information because it is important for take tax. You will have to pick one to write on your business lines.
License.
To keep it?
Your business license.
Yeah, to keep reading?
Yes, please.
Okay. One, side gig or side hustle. This is technically not business and does not require a business license. Two, sole proprietorship.
Good. I'll say that one for you. Sole proprietorship. Proprietorship.
Proprietorship.
Nice.
Three, partnership. Four, limited liability company. Five, limited liability partnership. Six, C corporation. Corporation. Seven, S corporation. Eight, non-profit corporation.
Nice. Thank you, Raquel. Okay, so Jacqueline, can I have you read this slide about what is a side gig?
Okay. Having a side gig can help you
pay your bills. Let's look at the pronunciation. Side gig.
Side gig can help you pay your bills or increase your savings. Income from your own small business or working at a second job bring in extra income without requiring you to quit your regular job. But like your main sources of income, a second job or side gig must be reported to the Internal Review Service, IRS, at tax time. As a side gig can be a hobby, seasonal work, or occasional work that take up a relative small amount of your time. The IRS, considering the type of job, other income, or form them for tax reporting.
Great. Thank you, Jacqueline. So side gig is just that extra work that we do. It can be your second job. It's adding extra income, but it's not your main way of earning money. Okay, let's have Fatia, can you read about how a side gig is different than a small business?
If you spend a lot of time on your side gig, the IRS may treat you as self-employed. If this is the case, you must file a Schedule C with your tax return. Schedule C is used to report business income and expense. Indications of employment are: your primary purpose is to make a profit, your side work is regular and continuous. Cash earnings from side jobs must be reported on your tax return, even if the earnings are minimal. And the reporting income from side work can lead to additional tax assessment and penalties. You can prevent this by reporting all income you get from your side gig, whether it is in the form of money, property, or service.
All right, fantastic. Thanks, Satya. Okay. Then we have a whole set of different types of business structures. These are our more common business structures. We have sole proprietorship and we have a partnership. So starting with sole proprietorship, it's one person who runs the business. So you're the owner. And then it has these things that are good or pros and these things that are not so good or cons. Genesis, can you read the pros for sole proprietorship and then read the cons?
Pros, good things, not double taxation, no separate reporting to IRS or state, income tax filing is part of annual personal tax return schedule, can deduce legitimate expenses from personal taxable income.
Okay, so those are all the good things. It's not as hard to file for taxes if you have a sole proprietorship. You just do it the same time you do your personal tax return. You just add one extra part called Schedule C. All right, what are some of the bad things, Genesis? This is called liable.
Liable for debts, liability, and lawsuit. More difficult to borrow money or take investments. You must make all the decisions. More per safe employment, tax on the business, net income.
Okay, excellent. Okay. And now let's look at partnership. A partnership is the same, almost the same as sole proprietor, but instead of just one person, it will be two or more people dividing the business. And these are the good things and the bad things. So, Uba, can you read the pros for partnership and the cons for partnership?
The second one?
Yep. Right here.
Oh, okay. Partner can share responsibility and expenses. Each partner is too small. I use the phone. It's too small for me. Each partner can do what he or does best. The partners can cover for each other. Partnership does not be separate federal income tax. Each partner can be held liability for the debit legal action against the business. Can we hold responsibility for action for another partner?
Dissolving.
Dissolving general partnership can be messy and costly.
Yeah, so for the first one, it's great that you can share the work, right? Share the work, share the investment. But on the other hand, if there are problems, it can be, a tricky situation. You can be held accountable for if your partner makes a mistake. It's not just your partner, it's both of you that can be in trouble. And if you decide to separate ways, then ending the partnership can all be very messy and can cost a lot of money. And we have a limited liability company. Tantan, can you read the pros and cons, please?
Okay. Limited liability company LLC, like competition because a business carry ability for a debit, not owner like also
Proprietorship.
Proprietorship, because only the owner are taxed. Limits are personal ability, no
Double
uh,
taxation.
double taxation, no limits on a number of
Stockholders.
Owners choose how they want to share the business profits. Less further
Governance requirements.
government requirements. Earnings are subject to a employment tax. A business could
Dissolve.
as an owner's die or left.
Yeah. Okay, so this is the most common small business type. A limited liability company is the most common, and it limits your liability. This word is liability. That means if your company fails, they cannot take your personal assets. They cannot take your house or your car or any money you have in your bank personally. They can only take things from the business. And so that's a good thing because we want to protect our home and our money that we have from our own personal accounts. The bad thing is that you do have to pay self-employment tax, and we'll talk about that later. I'm going to read the next one because I want to do this just a little bit more quickly. So the limited liability partnership, these are almost the same. The only difference is the limited liability company is just one owner, whereas the limited liability partnership is two or more people who are dividing the company, and they are sharing the responsibility and the liability. Again, nobody will lose their house because their business finances are separate from their personal finances, and that is why these two kinds of businesses are really attractive. They're a good choice for a lot of businesses. No double taxation, no limit on number of stockholders, share the financial responsibilities between partners. You do want to have a formal contract with your partners. Your earnings are subject to self-employment tax, so there is a tax that you have to pay for that business. And the business could dissolve if somebody dies. And dissolving a partnership can be messy and costly. Again, you might have issues with your partner, and that can cause some troubles. The last two, I am also going to read, and the reason I want to read is because I only get 15 minutes for my recording, and then it stops. So I'm going to make sure I get this finished in 15 minutes. A C corporation is separate from the owner. The business can buy and borrow money by itself, no matter who owns it. So a corporation is its own person. It's like its own thing. It doesn't connect to the business owner. It has its own bank account. It has its own taxes. It has its own liability. It is completely separate from the owner. It is a legal entity separate from shareholders. It can raise money by selling equity in business. Can be a good choice for higher risk businesses and those that plan to go public. So, and when we're talking bigger companies, we're talking choosing a corporation. Some of the bad things, it's more difficult and expensive to set up. You need a lawyer to set one up. It does have double taxation. So you have to pay taxes on your income, on what you pay yourself, and you have to pay taxes on the profits from the business. So that is different than a LLC or LLP because you don't get taxed double, but in a corporation you do. State charter is required and more documentation is necessary. An S corporation is right between a limited liability company and a corporation. So you have limited liability company, pretty easy.